Welcome back. I'm Jesse Bains with Yahoo Finance Canada. You're watching Editor's Edition, and today we're talking real estate during COVID-19. So since our last episode, there have been some changes to mortgage rules, a stricter stress test. Policymakers have said some things that had more than a few people scratching their heads. We've got your questions, viewer questions that we're going to answer. All that and more today. So let's get rolling. We have John Pasalis of Realosophy Realty with us. Hey, John from Toronto. How are you doing? Thanks for being here.
Very good. Thanks for having me.
And from Vancouver, we have Oakland Realty, Steve Saretsky. Hey, Steve.
Always a pleasure. Looking forward to it.
All right, so let's start with the GTA market, John, starting with the low-rise market. So detached, which had been one of the strongest, I guess the strongest market, townhouses, semis. How's that looking in the GTA since we last talked?
Still a hot market, a seller's market, but certainly slowing down. I mean, the interesting trend in the GTA has been that sales have actually been declining since March. So, April sales were lower than March, May sales were lower than April. That's not a trend that we typically see. Usually sales pick up as we move into the spring market. But again, I think things are easing up because a lot of the demand got pulled forward. March was pretty much the peak of the market. It looks obviously like now looking back, and things are starting to slow down on the sales side.
And how about the condo market, John?
Very similar trends. I mean, the one interesting difference is that in the housing market, new listings are declining just as fast as sales. So that market's remaining still pretty tight. Whereas in the condo market, new listings are pretty much kind of where they were over the past couple of months. So it's slowing down a little bit more, inventory's increasing a little bit, and that's seeing a similar trend where things are slowing down a bit right now.
Do you think the stress test that took effect June 1st, I mean, it's still early days, but do you think that has any impact on buyer psychology when it comes to the GTA market, John?
I don't think it's having a huge impact. Like, I think the market was unwinding naturally even before the stress test got kicked in. I think personally, I mean, just buyer fatigue, the weather getting better, things opening up in Toronto is probably having a bigger impact. I mean, these are things that usually slow down sales in the summer. And I think with everyone just being locked down for so many months, I think that's kind of in many ways probably having a bigger effect psychologically. And maybe those buyers will probably just come back into the market in the fall.
So what about prices though? I mean, sales have slowed, but people are wondering why prices haven't come down. Does that take time? How does that work? And when do you expect to see some sort of effect on prices, John?
Yes, so prices have pretty much been flat this entire year for houses. For condos, they've been flat for a few months. Prices aren't falling because we're still in the seller's market. We still have like 1 month of inventory, right? And for prices to fall, we probably need to see inventory levels up at like 5 or 6 months, which we're probably not going to see anytime soon. So even if the market cools further to a similar trend that we saw maybe in 2018 or 2019, where we had a couple months of inventory, that's still a market with stable prices, not falling prices.
Okay, Steve, what is the Vancouver area low-rise market looking like these days?
Yeah, I mean, it's sort of similar to what John said. It's like it's slowing down. I mean, I think it's pretty evident. We talked about it on the show before, but March was the peak. It certainly looks that way anyways, the more, the further we get away from March. So we're seeing just less competition. It's still a tight market. Like if you're looking for a nice move-in ready house, I mean, you should be fully expecting to still compete in multiple offers, but as opposed to 8 or 9 offers, again, you're looking at maybe 2 or 3 offers on a house. So to me, it feels like prices have stabilized from where they were. Now, how I always like to frame this up for people is like everything has to be taken into context, right? So we're coming off all-time record sales in March, so we're slowing off that base. But hey, if you come to me and you say, hey, you know what, I want to sell my house, Steve, like the reality is I probably would have been able to get you a little bit more money in March than what I can get you today here in June. So and that was just more a function that people were willing to pay really crazy prices in March, as you should expect when you're competing with 9 or 10 other buyers. Like, you're going to pay a crazy price. And so that's kind of where things are at in that segment.
What's the difference between, I guess, trajectory of the condo market these days versus the low-rise market? Is one sort of taking a bit of a lead in terms of strength in Vancouver, Steve?
I feel like the condo market's playing a little bit of catch up. Like, it's still strong. It has also cooled since March. But I mean, if you look at it, we're hovering around 2 months of inventory for sale. So that's still a really tight market. In my opinion, there is still a little bit of upwards pressure on the condo prices. I feel like the detached market, which has pretty much moved up about 30% in the last 12 months, to me looks like we've set a high for prices arguably a couple months ago, and we're kind of just treading water right now.
Okay, so here in Ontario, we're getting ready to open up just a little bit on Friday with patios, outdoor dining, and little bit more outdoor activities being allowed. John, is that taking any of the shine off of this cottage country boom that we've been talking about?
I don't know. I mean, I think it might be a little bit. I mean, I think people just naturally are going to be hitting pause probably on their search and probably just spending more time renting a cottage or going to a cottage rather than shopping for a cottage. And again, I think these are pretty seasonal trends, and I suspect we'll probably see that as we head into the summer.
Okay, how about out your way, Steve, in the Vancouver area and beyond?
I mean, I think the one thing about the summer rec properties is that typically speaking, if people were going to buy them for this year, like they want to be able to move into them for the summer. So, now that we're at the beginning of June here, like, you're kind of at the very tail end, I would say, of this sort of cottage rec property market. But I think, overall, now if we look into the sort of the last trend during this whole pandemic has been suburban houses, have been the greatest growth beneficiaries. And I think that we're really starting to see that market slow down. And it'll be really interesting to sort of see, in 6 to 12 months where that market is, because obviously it had such a massive run up. And again, we talked about it, I think, on last show, but I think that we're entering what I would call almost like the great reopening. Canadians are vaccinated or getting more and more vaccinated and desperate and eager to get outside. And so I think similar to the last show is that I think real estate will take a bit of a back seat here this summer.
Yeah, I feel you. I'm anxious, as I'm sure you all are, to get back out there and hit a patio this weekend. Friday, we'll see if I can find any spots. There'll probably be lineups around the corner. Okay, so let's get to viewer questions. I didn't want to wait till the end and run out of time because we sometimes get carried away. These discussions go longer than I had anticipated. So let's start with, and I just want to say that we took the first 5 that came through. We'll get to the rest of them in future episodes, I promise. But for now, Ajax Moore asks, how low can cap rates go? They've been going down historically due to falling interest rates. But can they compress any further if the interest rates don't move further down? So, John, if you could explain what cap rates means and then give a shot to answering Ajax Moore's question.
Sure. So cap rates are basically just looking at the net income on your investment property divided by the purchase price of your investment property. So if I buy a condominium for $500,000 and my net income is $15,000 a year, then my cap rate is 3%. And investors are willing to go with an investment property with a lower cap rates when rates are lower. So a few months ago, when investors were able to get mortgages below 2%, they're fine paying getting a cap rate of 3% because the return is greater than their interest payments. But as the interest payment increases, then they're not as comfortable taking on a low cap rate. So to answer the question, I don't think we're going to see much more compression, largely because interest rates have been trending up over the past little while. So it's harder to justify these really low cap rates on investment properties.
All right, that's good information. I hope that answers your question, Ajax Moore. Moving on to Comex Bull. This one's for Steve. He asks, this is a monetary policy question for Steve. What scenario, if any, causes rates to go up and can't be remedied with the BOC simply buying up those bonds? If rates do move up and the BOC buys bonds and forces yields back down, what then, Steve?
I mean, I think the short, simple answer would be inflation. So, if inflation starts to take off, people say, well, can the Bank of Canada continue to buy QE? I mean, there's various views and opinions on this. I don't think there's a simple answer. I mean, people smarter than I have suggested that, financial repression, which is essentially yield curve control, where they come in and target yields, might not necessarily be done by the Bank of Canada. It will be done by essentially the government working with savings institutions, where they are basically forced to come in and buy government debt at a certain price, certain yield, to basically ensure that yields remain suppressed. So, I mean, my view ultimately longer term is that We have a lot of debt. I don't think there's any portion of society that can tolerate, rising interest rates. And so my personal view is that I think we will be forced to do some form of yield curve control.
Okay, interesting. I hope that answers your question, Comex Bull. Moving on to El Senor. With the way real estate prices have appreciated over the last 10 years, do you feel the same opportunity of appreciation could exist in 10 years from now? For example, house in, I guess, East Van selling for $4 million. Do you think in 10 years that could fetch $8 million? Is that plausible, Steve?
I think it's possible in nominal terms. So again, if you've got, high inflation and, rapid currency devaluation, then yes, that could very well go up to $8 million, but, a loaf of bread might cost you $100. So I think it's all important to contextualize that.
John, do you think that in 10 years, let's say, what's the benchmark price? Like just over $1 million, I guess, right? Are we looking at 2 million in 10 years?
I think it's highly unlikely. I think, with prices as high as they are right now, families can't afford houses. The market is so stretched as it is. It's not to say they can't go higher again. I think Canada's plan has been to just bring in wealthier immigrants, let them buy at the houses that, local people can't, and the local people basically move out, unfortunately, has been our federal government's policy. So prices can go higher. I don't think it'd be hard to imagine they go up as that high that quickly.
It sounded kind of crazy back a few years ago before the benchmark prices hit went as high as they did, and it seemed impossible. But here we are. So who knows? We'll have to wait and see. Hopefully we can talk in 10 years and we can look back at this moment. Okay, next we have Yasser Khan. Yasser asks, always a great show to watch. Well, that's more of a statement, but I thank you for that statement. Question: should we expect free markets to deal with the lack of supply issue, or do we need more deliberate government intervention to increase the supply? This is the $1 million question that gets asked all the time. John, I'll let you start.
There's two sides to this. Arguably the one side is government intervention kind of is one of the barriers to supply. And I think this has been one of the challenges. So, the one is we need to sort of remove some of these barriers. But the flip side to that is the free market alone can't solve these problems anyways, because if we just look at what we're doing in Toronto the past 10 years, we've been building way more condominiums, far fewer homes. And the supply gap that's missing are 3-bedroom family homes. The fact that we're building more condos is actually, that's all rent. The majority of that's actually rental inventory. So we're actually building far fewer family homes today than we were 10 years ago. So in some sense, we need some intervention to kind of change this trend that we've been on. But on the other hand, we need to remove a lot of the barriers, and especially even in urban cores, to be able to build, denser housing. So I think it's a combination of both for sure.
Right, and I guess NIMBYism is a big part of that.
Absolutely.
Piece, right? Okay, Steve, what's your take from the Vancouver area perspective on Yasser's question?
I think the government needs to deliberately get out of the way. In Vancouver, I think it's government fees, for example, equate to 26% of the cost of a new home in the city of Vancouver here where I am. So there's so many fees that get tacked on to this new development. I think the other problem is we have to look at the fact that in the city of Vancouver, I can't speak for Toronto, but we have single family homes 10 minutes outside of the downtown core. And those single family homes on the west side there start at like $2.5–3 million. So I think for like a global city where prices are so crazy and so unaffordable for most people, the fact that you have like single family homes like 10 minutes outside of the downtown core to me seems a little bit insane. But again, that's sort of the political NIMBYism. Nobody wants to upset the apple cart, and the politicians are all trying to walk this sort of tightrope of trying to keep everybody happy. But again, similar to, I had this conversation the other day, but we look at the government says, hey, you know what, we're going to hit these immigration targets, 400,000 new residents per year, blah, blah, blah. But then there's no sort of communication with the municipalities. How are the municipalities going to house these people? And so I know that, the Trudeau government is now setting up some sort of task force, so to speak, that, they're going to work with the municipalities to try to figure this out. But there's got to be some sort of plan. If you're going to ramp up immigration targets, you need to figure out a way to work with the cities to actually get the proper supply built to house these people.
Yeah, and we're going to get into that task force and the Prime Minister's comments in just a few minutes. I promise we'll get to the political policy stuff as we have been doing, and it's always a hot topic on this show. But let's take one more question. This one's from Van RE Analyst. With sales slowing in all sectors, do you see the now established larger price gap between condos and detached sticking around for good? John, we'll start with you.
I mean, certainly in Toronto, again, it kind of goes back to the supply issue. If you look at what we're, in fact, underbuilding in Toronto, we're underbuilding low-rise, single-family, whether they're townhouses or semis, doesn't matter, but this family home of 3 bedrooms. So that's really what we're underbuilding. We're building a lot of condominiums. So I suspect that price gap's going to continue for sure.
Okay, Steve, what's your view?
Yeah, so I just want to I think it's important to contextualize things here. So in the Greater Vancouver area, we don't build. There's no new family home subdivisions that are just popping up. So you think about in the U.S. and they just sort of expand, and there's this new single family house subdivision that's just being created. That doesn't exist in Greater Vancouver. We don't create any more single family houses, really. Especially if I look at the city of Vancouver where I'm at, every single year the stock of single family homes actually declines, because what happens is these single family homes are getting packaged up into townhouses and condos, and so I think that the detached single family house in the Greater Vancouver, unless you're going way out into the suburbs, an hour out, single family homes are going to continue to be really a luxury good. They are a premium good because in Vancouver, we have nowhere else to build. We can only go up. And so that's where we're seeing the density. And again, we talked about earlier, and John mentioned too, it would be nice. I think families would certainly and I think it makes sense. We would love to build single family houses, but I just don't see how it's going to be possible in Greater Vancouver here. There's nowhere else to build, so we have to kind of go up.
Right. Okay. So that's a perfect segue into what I want to talk about next. As you said, Prime Minister Justin Trudeau is putting together a task force willing to work with municipalities. That includes funding to help make housing affordable. But it doesn't sound like he fully grasps how unaffordable things have gotten. If you take a listen to this clip, have a listen.
In too many places, owning a home is too far out of reach. After all, how's a young family somewhere like Vancouver supposed to put away enough money when regular houses cost upward of $1 million? And in Canada's largest city, it now takes almost 280 months for an average family to save for a down payment. Look, owning a home is a big investment, so it makes sense to rent or stay with family while working towards a down payment. But 23 years to save for a house? That's just not reasonable. Young people aren't facing a housing problem. They're facing a housing crisis. We've got a generation of Canadians who are starting their lives and maybe hoping to start a family without the same opportunity as their parents or grandparents to get a first home and build equity and their future. Things need to change, and that's what our government is focused on.
Okay, so starting with you, Steve, we'll get into this, a couple of the different things you said, but let's start with a regular family house. I mean, so he didn't say home, so you can't really say he might have meant a condo, but a regular family house costing upwards of $1 million. Is that close to being accurate?
Yeah, that sounds about right.
Really?
Yeah. Oh, well, I mean, in the city here, I mean, certainly, again, you can go out. I mean, I don't think everybody should be living in the city of Vancouver. There's plenty of suburbs here,
but in the city of Vancouver?
City of Vancouver, yeah. I mean, your typical 2-bedroom condo is around $1 million, and single-family house would be around minimum, probably around 1.8 for a typical home.
Right. Yeah. So that's what I was getting at, is because he did say house and not condo. So $1 million isn't going to buy you a single-family house in
I think
Vancouver.
just to touch on that, I can tell you that the Greater Vancouver, so like the lower mainland here, the Greater Vancouver price of a benchmark detached house is 1.6 million.
Okay. Yeah, so that's what I was getting at. I don't mean to beat up on the Prime Minister, but but it did cause quite a stir. And John, he said it's I don't want to put you on the spot here. He said it's something like 280 months to save up for a home, and this time he said home, but in the GTA. Does that sound about right to you? And does that sound reasonable for a family to have to go through?
Well, no. I mean, and this is one of the biggest barriers to get into the market. You know, at the end of the day, people can't borrow much more than 4.5 to 5 times their household income. You know, but the average price of a home in Toronto is 10 times household income. So how do you bridge that gap? I mean, it's through savings, it's through, you know, money from family, and that's the biggest barrier to get in now. I mean, your lending's constrained by these stress tests, so you just need capital, and people are just getting more and more and bigger gifts from family members.
Does it, and you know, not to get too political here, but does it seem slightly disingenuous considering how much prices have run up since this government's been in power in this country, to now, after such a huge run up of 30-40% in some places, to now say that they're concerned about affordability?
Well, kind of, yeah, absolutely. And it 100% is. And prices have definitely gone up significantly more under this government than the previous government. I think at least in the GTA, I think obviously part of that is that we've had this massive immigration boom since 2015 that has helped push prices higher. But as Steve mentioned earlier, I mean, at the end of the day, the federal government has some insight into what municipalities can build and how many homes they can build. And if they know from today that they don't have enough supply to accommodate this immigration boom, then their decision to sort of really accelerate immigration is really a deliberate decision to inflate house prices. Like there's no like that's what it is. So, you know, they basically just decided to really accelerate this immigration boom. And the product is higher home prices. There's no surprise. Like that was part of the plan.
Okay, let's move on to the Conservative plan with their a motion. If we could take a look, they had some ideas. Okay, so examine a temporary freeze on home purchases by non-resident foreign buyers who are squeezing Canadians out of the housing market. Next, replace the government's failed first-time home buyer incentive with meaningful action to help first-time home buyers. C, strengthen law enforcement tools to halt money laundering. And that's a topic that we always seem to run out of time to talk about, but I do definitely want to get into at some point more in depth. But implement tax incentives focused on increasing the supply of purpose-built market rental housing units, and overhaul. They want the federal government to overhaul its housing policy to substantively increase housing supply. Steve, what do you think of this plan?
Well, I mean, I don't even know what option E means. What does that mean to overall? It's a little bit light on details. But yeah, I mean, I think that you know, the non-resident one would certainly be a popular one from a political perspective. I think it's rational to suggest that, you know, we need to house the people that live and work here. I think that you know, incentivizing purpose-built rentals is a much-needed alternative to home ownership, right? I mean, I think the problem that most people are suffering through, again, at least here in Vancouver, is that we don't really have a lot of purpose-built rental housing. So most people that opt to buy they're so sick of getting, you know, their landlord deciding to sell, and every 18 months they got to up and leave into a new home. It's extremely stressful. And from what I talk to, especially for a lot of families, right? I mean, if you're starting a young family, you want security, and you don't get security in a non-purpose-built rental, right? Because the landlord can decide at any moment that they want to sell, and you got to leave. So yeah, I think that some of these points would certainly help. I mean, the first-time home buyer one, again, I'd have to see, you know, what there's lacking any sort of detail. I think this is certainly part of the problem with a lot of these government solutions. They sort of say things without, you know, a whole lot of detail.
John, quickly, your take. Want to move on to some other things, but go ahead.
Yeah. I mean, I agree with Steve. I mean, generally at a high level, it's certainly more than the Liberals are doing, which is pretty much nothing, and would be more popular. But again, I think the key is it's in the details. I mean, this is obviously early stages, so we don't know much, but you know, some of these policies are definitely positive.
Okay. And here's one of those policymaker comments that sort of got people scratching their heads a little bit. This is the Bank of Canada Governor Tiff Macklem warning Canadians about taking on too much debt and the house prices don't keep going up forever. This is during the financial system review. Have a listen to what he had to say, John.
Canadians need to be prudent in taking on new debt. It's important to understand that the recent rapid increases in home prices are not normal, and interest rates are unusually low. Borrowers and lenders both have roles in ensuring that households can still afford to service their debt at higher rates. Counting on ever higher house prices to build home equity that can be used to refinance mortgages in the future is a bad idea.
Okay, so we are running low on time. I got one more clip I want to throw to. So John, real quick, what's your take on the messaging here?
Well, I mean, they're obviously changing their tone. They realize they've significantly overstimulated the market. I mean, at the end of the day, a year ago, what they wanted people is to take on tons of debt, and in fact encouraged it. They kind of got what they wanted, and now realizing it's a little bit more than they bargained for. So they're kind of changing the tune right now. Okay,
and there's a lot of this blame game going on. I don't think any one factor or one entity can be singled out for being the creator of this for lack of affordability we're seeing. But a reporter just straight up asked during that press conference what the Bank of Canada's role is in creating the situation we're in. Have a listen to that.
This is largely driven by fundamental demand. Canadians, particularly, we're all spending a lot more time at home. Canadians want more space. We're acutely aware that this housing market is really making it difficult for some Canadians to get into the housing market.
Steve, is he correct?
I mean, I don't know about fundamental. I mean, there's a fundamental emotional demand during the pandemic. I mean, in terms of fundamentals, one of those fundamentals that he's talking about is none of this would have been possible without mortgage rates at 1.5%. I mean, if you lower mortgage rates artificially, which they did through their QE program, obviously you basically entice that demand, right? I mean, so yeah, I mean, the Bank of Canada, don't get me wrong, definitely has a significant role to play and is certainly accountable, I think, for some of the run up here we've had in house prices, no doubt.
Okay, and I just want to point out this is being recorded before the Bank of Canada's interest rate announcement, where we'll learn more about what it's going to do with its quantitative easing program, and if it sees any concerns with the housing market. Check back on Yahoo Finance Canada for updates on that. But meanwhile, check out John and Steve on Twitter. They share all kinds of stats and news and trends and things going on the real estate markets in the Greater Toronto Area and Vancouver. Thank you, John, for being here.
Thanks for having me.
And thank you, Steve.
Always a blast. Thanks for having me on.
And thank you for watching. Until next time, be sure to check out Yahoo Finance Canada for all the latest on real estate markets, on investing, the cryptocurrencies, energy, you name it. Thanks. See you next time.